Welcome back, Howard.
How you doing?
Doing good, buddy.
Excellent. Yeah, long time. A lot has happened since we last spoke.
Yeah, you were very constructive. Euro, very bearish. Dollar, what was it, about 2-3 months ago? So
Yeah.
things have moved in the direction of your forecast. If you can share your screen, it's that green box there.
Yeah, let me see.
And we'll be
Share
able
screen,
to,
one sec.
yeah,
Where are we now? Let's see. Share screen, share. Okay, can you see it?
got it.
Cool. Excellent.
Okay, so we're looking at gold right here.
Oh, yeah, it was a second ago. Okay. Yeah. So yeah, as you say, yeah, I've been very bearish on the dollar. Broke down quite nicely. Gold up. All the things that should have happened did.
Okay.
I think we come in at a very opportune time because you can see this gold Elliott triangle, which I think completed a few days back.
Okay.
So basically, if we were extremely overbought at this point, when we made the apex high, we're very underbought at this point.
Yeah, and only by going sideways.
Yeah, I mean, RSI back then was like 85, 86 or something, 87. We've corrected back and it's just bumping along the bottom, which is where you'd normally look to buy in a healthy bull market. So oscillator readings, Elliott patterns, all that kind of stuff, all kind of very supportive for gold. So I think we're actually, I'm glad we're doing the call today. You know, we could have been doing it when when gold's making multi-month highs, but I think we're doing it at an opportune time that the readers, if they're interested, they've got an opportunity here.
Okay, yeah, because well, it looks like people are already front running the Fed. What are you expecting from the Fed, Howard? Anything?
Oh, do you know what? I'm complete. It's really sort of not my game at all.
Okay, all right.
You know, the more I try and think about this stuff, the more confused I get, and I think the more it misleads me.
Do you have an answer on why the yen has become just almost non-tradable instrument? And the yen crosses used to be great things to trade. My associate was talking about it, and now it's almost like trading it anything against the yen, almost the same as trading it against the dollar. You have any explanation for that?
Yeah, no, I think it's just that part of the risk on, risk off thing seems to have gone out of the window for whatever reason. Maybe people got a bit fed up of playing it and it didn't work, so they've moved on. I don't know.
Okay.
But yeah, I mean, dollar yen is pretty boring. I think it's kind of a little bit like the inverse of this gold chart, that it looks like it's about to break down in line with dollar weakness. Or euro yen is kind of stuck on the upside. It wants to go higher with euro dollar. So you've got that kind of situation where you've got a bit of a divergence with some of these yen crosses. They seem to do their own thing at the moment.
How about the moonshot we had in euro pound last week?
Yeah, that was a nice one. That was a nice one. That was I managed to catch some of it. So, but it's a notoriously tough cross to track, I think.
Okay.
A lot of it,
you're looking for continuation of euro relative strength over the pound, or it's way overdone?
Yeah, I think the euro is in a sort of a structural bull at the end of the day. We've had this. Where is it now? Let's just go back a little bit. Yeah. So basically, we've just been going sideways with an upside bias. Obviously, last week or two, we've seen this kind of break through to complete this consolidation. So it looks to me to be a euro bull sterling bear type situation. But my kind of strong conviction view is really on US dollar rather than on these crosses. I'm not massively aggressive on the crosses.
Okay. So what's your US dollar look? I remember last time, you have cycles that take it down dramatically. Are we okay? Yeah. So we're not even close to an area where you would see some type of dollar recovery.
Not a sustained one, no. Yeah. I think this is a kind of early stages. I mean, yeah, as you say, last few months we've got the kind of the push down. So the guys that bought the breakout of the previous high from here, they started to bail out. Now it's a kind of like a reappraisal. I think we've got this this big divergent situation which needs to see some more downside.
Okay.
And you know, for me, the whole structure of this rally from what 2011 to the recent high, it's the same kind of thing as this 95 to 2000 2001 advance. It's just like a C wave within a flat, irregular flat bear market rally. This is on a mega long-term view, so we're taking some pretty long-term positions here.
Okay.
But yeah, that's the way I see it, and it seems to.
Do you take partial profits on a campaign trade? I call this you know a campaign trade because it's a long term
Yeah.
position that's going to take multiple months, maybe years to play out. So, wondering if you trade around it or you just stay short and leave it alone and just keep trailing your stops.
Yeah, I
Do
mean, well, my actual trading stuff is really short term in nature anyway. So, to be fair, a lot of it is not dependent on this multi year outlook. So this is much more for a kind of a backdrop and for people who are institutions who are looking for where's the next 10 big figures kind of thing.
Would Aussie, any of the commodity currencies fit in to the same type of, general dollar weaknesses? Do you think Aussie or USD CAD offer opportunities with a weaker dollar ahead,
Yeah, no, yeah.
more muted?
Yeah, no, I'm still very much. I think a lot of it is stock market driven. It seems to, a lot of these charts resemble, this kind of COVID bear market thing and risk off then risk on type thing. But yeah, it's we've been doing a gradual recovery and pullbacks and typical bull market action. Aussie recently was overbought, come back again to that kind of below 50 or so on the RSI. Back into the averages, that sort of thing. Just buy it for the next move up, I think.
Are you looking for a continuation of weak dollar risk on in equities, or will we reach a stage where there'll be a decoupling of a weak dollar and risk?
Yeah, the only thing I see really as a kind of a decouple is the crude, because I think crude. This is S&P future front
Yeah,
month. So yeah, nice steady, advance, a bit like the Aussie, I suppose, in some respects. A nice steady advance
right.
from the low. Pullbacks looks again to be a little bull market pullback, maybe complete or nearly complete. RSI was overbought, come back into the the buy zone, if you will. So I'm still looking for new highs on stocks. I wouldn't say that there's going to be any massive decoupling at this stage.
Okay.
The crude was one which kind of concerned me a little bit in terms of we're not doing the same kind of stuff as the stock market.
No, we're not.
So that would be the one that I would say maybe perhaps not quite as bullish as the other stuff. A bit of decoupling on that risk on type thing.
How do you work that into um, any? I know you're mainly a technician,
Yeah.
as most of us are, but how do you rationalize crude being so weak with a weak dollar and risk on? What do you think the problem is here?
Yeah, it might be economy thing. It could be one of those things where people are looking, beyond all the stimulus and tax cuts and everything. Maybe
Why
people.
would they look past it in crude and not look past it in other instruments?
Because I guess for the things like the stocks, you've got a bit of a put option from the Fed.
Okay,
So
yeah,
you've got some artificial support for the the financials, if you will,
I
whereas
see.
something as real and as crude, maybe a bit more responsive to the real economy. I don't know, but I try not to think too much.
Okay. Do you have any like near-term targets? We peaked in euro about, I think it was a little over 120. What levels do you have coming up here that we should pay attention to in euro?
Yeah. One second, let me just get that chart back up now. I think we've probably just done the correction on the euro. Actually, can you see that? Your screen sharing.
Yeah.
Can you
Okay.
see that? Okay.
Yeah.
So move this window away. Is that window
I know a
blocking
lot of
anything?
people were, yeah, I see the window. A lot of people are looking for like 2170, I believe. That would be 78.6 back from the, I think the 140 high to the whatever low, right around near 122.
Yeah, yeah. For me, I think as with some of these other markets, you've had that overbought divergence thing where the
Hmm.
market tried to make new highs, and we've seen it kind of not be reflected. The market made new highs, and then we saw RSI, for
Right.
example, make lower highs, lower lows. But again, I think we are now into that ideal kind of buy spot for the next leg up on euro dollar. So I think we could bust 120 on a sustained basis, maybe the next week or two. That would be my,
Good.
along with gold making new highs above where are we? I think the trigger on gold cash is like 1966 and a half or so. So we get a break of
Yeah, that was
1966.
last week's high. Yeah.
Yeah, yeah, we get a break of that. Then I think we're off to the races on gold. Similarly on euro, 119.20 or so. So
Okay.
not,
Anything in the emerging market currencies that have grabbed your attention, or you don't
No,
even pay
to be
attention to
honest,
them?
I've not really been focused on those ones.
Okay.
So yeah, for me, it's all about the dollar majors, and is the stock market going to make a new high kind of thing. That seems to be the game. But I think my biggest trade right now is long euro dollar and long gold.
Okay. All right. So if people want to follow your work, Howard, I think we've covered most of what you wanted to say today. Am I
Yeah.
correct?
Yeah. The only other thing I'd like to mention every time we do talk is this mega long-term system thing, which I follow. Basically, a very simple breakout system which has been working on dollar Europe since 1976.
Wow.
So it's basically a Deutschmark futures
Yes,
going
I
back
remember
from
that. Yeah.
yeah. So it's basically a trend breakout type system, uses a couple of inputs. One is like a swing high, swing low indicator, and another one is a Donchian channel. So
Okay.
it's been very reliable on the dollar against the major European counterpart since the 70s, I would say. So euro, it gave a buy at where is it, 115 or so here,
Yeah.
just below 115, 114.95. So this is quite an early young uptrend, in my opinion. We've had a few whipsaws, obviously, back end of last year and early this year. But typically, what it does when it catches some very big, multi-month, multi-year moves. In fact,
Okay. So I'm curious, do you do anything that might interest a retail trader? Because I know you manage money. Um, I'm not sure what the kind of credentials you need to be with a money manager like you. I'm sure it's different in Switzerland than it is here. Um, any services or letter or anything you provide to the retail guy out there?
yeah, I do some mirror trading through a DupliTrade, a company called DupliTrade. So people can track my systematic trading on a short-term basis. Also, I do a lot of bespoke training one-to-one because a lot of people they want to learn how to do this themselves. So I do a lot of one-to-one coaching, mentoring. I've even got some fully disclosed systems which I include, which a lot of people like to use. And if they don't use it as 100% of their trading, they'll have it as quite an important input. So there's a lot of things that I do and can do for retail clients.
Okay, and the best way for people to get in touch with you?
Email, so hmfsystems@gmail.com.
Okay, and you're not that active on Twitter, are you? You don't do much
Um,
there, Howard.
Yeah, I check it out every so often, but I'm not massively active on it. But at break underscore retrace 3, I believe is my handle. So that could be another means of.
Okay, you big bear, pounding it, pounding down on the U.S. dollar while we're, you know, having the most trouble with COVID, and who
Oh
knows what
no,
kind of election we're going to have. Do you think that, what's going on is also part of it? Confidence crisis. The U.S. is not looked at the same way in the world it was 4 years ago, and the way we
yeah,
managed COVID and the way we're managing of course, our finances for generations. Do you think that's part of the reason? Or could it also be that for the Fed, I know you say it makes your head explode, isn't the dollar the easiest thing to be the sacrificial lamb to generate at least nominal growth and keep the stock market alive, etc., because a stronger dollar is more deflationary. So if the Fed could do anything, it would be more of an invisible type problem, depression, continuing to debase the dollar. Isn't that the easy answer?
yeah. I think I guess it's some might say the last vestige of the scoundrel to devalue your currency. Um,
You're great, Howard.
I mean, of course, you've got a lot of competitive devaluation going on as well, so they all play that game.
Yeah,
But one thing, some of my workers on this long term stuff is that for whatever reason, I know we've only got a little time left between now and the election, but typically Republican administrations have seen a net decline in the U.S. unit of at least 15% since Nixon, whereas
interesting.
Democrats have seen the opposite flip side to that. Apart from obviously Carter was quite a big deviation on the downside, but that was during the 70s. But Republican administrations, they for whatever reason, they like to oversee a decline in the U.S. unit for some strange reason.
Okay, what a great tagline. And again, give me like just your best guesstimate, euro price by year end.
By year end, where are we now? We're middle of September. I will go 123.
123. Howard Friend, my trading warrior brother, thanks again for coming and edifying us and updating us with your super bearish dollar view, buddy.
A real pleasure. Lovely to do this, Dale. And yeah, good luck to all the readers out there, all the viewers.
Thank you, Howard. All
Take
right,
care.
everyone. Take care. Good
Bye.
hunting, and remember, everyone, don't just count your pips, count your blessings. And we'll be back with you tomorrow for Turnaround Tuesday. You're very welcome, Marina. I'll see everyone tomorrow. Adios.